Dear Kenny G, you've got to come harder than that. Is there any chance that you can turn it up and hold this off until the 12th so that I can buy more AMC? I am informed that we have you by the Fig Newtons and we are continuing to squeeze them. This might have just gotten out of hand, and if you can, pass a message on to AA for me. Kiss my ass. Get that sent off tomorrow. Yeah, do that wind effect. Yes, sir. You already know what time it is, baby. Y'all bring it in. Listen, Linda, listen. AMC is snatching. As we all knew, we've been calling this play-by-play. Guys are walking in the earnings. This is not looking good for short sellers. We got some keynotes that I like to cover about things that have occurred today, as well as some keynotes on our AMC that we'll catch after we catch this clip here. But a interview with Peter Schiff about the decaying economy and where he relates this to 2008. Let's tap on in here, baby.
With Euro Pacific Capital's Peter Schiff and NatAlliance Securities global fixed income head Andy Brenner. Andy, I will go to you first. Your gut reaction of the most important issue here.
The most important issue, I think, is the fact that he's focusing on credit. He's already seen the senior loan survey that's going to officially come out Monday, and I think it's going to be ugly, similar to what the ECB survey was yesterday. So he knows that things are really looking bad in the regional bank space, and I think that's something he's very much concerned about. And yes, I do think the Fed is paused for now.
Okay, maybe we can put up some regional banks, because I think what you're
everybody's
seeing
supporting
is a
this
problematic behavior here. What was it that he said? Because one of the things he said, and I kind of was a little shocked by this. I mean, I get it from Mary Daly,
Send
the San
retail
Francisco
to the moon.
Fed, who said, oh, there's really, we've stabilized the situation. But he specifically said the banking system is sound and resilient and strong.
Liz, I've heard so many times since the first of Silicon Valley Bank, the banking system is fine, the banking system is stable. And then,
guys, mind y'all, they're never going to come out and be like, hey, the financial market's collapsing. Everybody do a bank run. They're never going to come out and say that. So I don't know what she's asking with that. But clearly with your eyes, you can see we have new banks on the verge, PacWest, Western Alliance that are on the watch list. Guys, but all these banks were involved in these fraudulent, bad bets, bad loans, bad paper, bad money, bad everything. And this interest rate is snatching up. Jay Powell is told and was said over and over again, hey, we're running through these rates. And it was like institutions and banks thought he was playing. Like they just kept rolling about it. There are going to be way more of these to come as what they're going to relay in this video. Just due off the fact of how many, you got to imagine, most of these people that are short selling were borrowing money. They were borrowing because there was a 0% interest rate. It didn't matter. Hey, I get it to you, brother. Oh, yeah, for sure. Not now. Not now. It's up in smolders. We got ashes going up in there.
When we heard on Monday, First Republic has been bought by JP Morgan. Then look what happened yesterday. I mean, you had some of the banks, PacWest down 25%, Western Alliance down 20%. The KBW index down 7-9%. Liz, it's not over by a long shot. When you have Treasury bills yielding 5.20 and banks paying 1%, and the ease that this is the thing that Powell said he didn't understand.
Mind y'all, just so everybody knows, I'm watching these videos for the first time with y'all, by the way. I get about 10 seconds in to see if it's pertaining to what I would like to hear, what I think is a good point, because sometimes they be clickbait. This stuff, when I'm coming out and I say something, I didn't watch this video through that. I feel like that'd be weird if I already watched it and then.
And what he doesn't understand, because he didn't mention it, how easy it is to move money out of banks into markets right now. It's never been the case, and they have to factor that in, and it's going to continue to be a problem.
Peter, interpret why you believe the Fed tightened rates 25 basis points this time.
Well, because that's exactly what the market expected them to do, and that's what the Fed does, what the markets expect. But it's not going to do anything regarding bringing inflation down. The elephant in the room with respect to inflation is the fiscal policy. the debt, not the ceiling, but the fact that we're running these.
Yo, look at this. Look at this interest rate running up on them. From March 2nd, 25, 50, 75, 75, 75. November 2nd, 75, 50, 25, 25, and 25. Woo! Guys, we're going up to probably, to be honest with you, it sounds crazy, which it ain't even crazy because it's been much higher. Guys, this is going up to probably, we're going to rest probably around 8 or 9% interest, I believe. I feel like it's going to go up there. I feel like you're going to get, for you to have really good credit, I feel like you'll get like a 7%, 8% interest rate. That sounds crazy, but I think that's what it's going to have to come to settle to, because this isn't, what we're doing right now isn't fixing the problem. This is just going to stop the inflation. That doesn't fix whatever booms and explosions that happen because of stopping inflation. That's what follows over. That's what you have to deal with to get through it. That's the recession / depression. You know what I mean?
Massive deficits. And until the federal government reduces spending, these quarter point increases are going to be completely ineffective. And the problem is Powell refuses to call Congress out and mention that the driving force behind all the inflation that they've been creating is reckless government spending. And as long as the government keeps spending, inflation is going to get worse, and so is the current financial crisis. And nobody wants to admit we're in a financial crisis. It is worse than the one we had in 2008. It's just getting started. Ultimately, the Fed is going to cut, but it's going to cut as inflation is accelerating.
Okay, you just brought up the elephant in the room. Let me bring up the canary in the coal mine, because when he was asked specifically, and I don't mean to really hammer the regional bank issue here, but this is significant, folks. He brought this up because he was asked, and he talked about how in the past his focus had been the labor markets and pricing pressures, et cetera, maybe even wage inflation, kind of pushed that to the side. And here's what he said about the near future and what he's looking at. Listen.
Stopping that inflation.
I think the particular focus for us going now over the past 6-7 weeks now and going forward is going to be what's happening with credit tightening. Are small and medium-sized banks tightening credit standards? And is that having an effect?
Kenny boy. Hey, guys. It's getting... I believe it's going to get real ugly to be short selling these retail stocks, especially if you've been playing synthetic boys. If you've been playing with them synthetic boys, if you're part of synthetic gang, hey, listen, I believe that you're about to get smoldered here.
On loans, on lending, and so we can begin to assess how that fits in with monetary policy. That'll be an important thing.
Peter, if it has an effect, let us be clear. And I know you have said specifically that everything that was built, meaning every investment that was built on a foundation of 0% interest rates, which we had for very long, will crash. Can you be specific about exactly what?
Well, one thing in particular are the banks. I warned for years that the banks would start collapsing for the precise reason that they're collapsing now. The Fed kept interest rates at 0 for so long. That's what allowed these financial institutions to load up on overpriced, low-yielding treasuries, mortgage-backed securities, and other loans, plus U.S. government auditors from the Fed, FDIC. They encouraged the banks to buy these long-term treasuries and mortgage-backed securities because they gave favorable accounting treatment. The banks didn't have to mark them to market as long as they could pretend they would hold them to maturity. So the entire house of cards was erected by the Fed and the U.S. government. And now it's collapsing, and they're acting like they have nothing to do with it, and they're trying to figure out how to put out a fire that they lit. And, of course, the problem is they're not putting out the fire. They're throwing gasoline on it.
Okay, Andy, as it pertains to that discussion specifically, the reason the Fed has raised interest rates over and over and over now for the 10th time is because they were trying to quell inflation. We get that. However, if you look at the trajectory over the past several months of how inflation has come down, back in June, it was at 9.1%, and then you can see it coming markedly down. I believe we have a bar chart
because he's raising rates.
And, I'm just
interest rates are going up. It ain't because it's just on its own.
Is the inflation horse back in the barn yet? He didn't say yes.
No.
Is the inflation horse back in the barn? A little bit, but I really do believe it is going in the right direction, but it's going to be sticky. I think one of the things he said today is wage inflation does not lead to real inflation. I'm not sure about that, but nonetheless, getting to Peter's point, you know, on banks, there's basically 1.94 trillion of unrealized losses on their books based on a lot of these treasuries and mortgages that they own. That's a problem. And
how many banks are still in trouble? Because USC's Marshall School of Business in Stanford,
100,
they did a study. They said 186 banks are in distress right now.
It's actually going up. That's crazy.
I don't know, but I know the Fed looks at 6 or 8. I don't know if that number's expanded. Obviously, PacWest and Western Alliance are part of those too, in my estimation.
That's the next
one.
one.
You know, you've taken out a couple. No question,
one
the
of my
banking
keynotes
crisis is not over by a long shot. Too many easy alternatives.
Peter, in a word, who's going to feel the move today the most? Is it the banks? But if so, which part of the banking system?
Of course, everybody that has debt is going to feel the pain of rising interest rates. That makes that debt harder to service. And of course, there's a lot of debt that is still low because it hasn't matured yet. A lot of corporations, a lot of people in the real estate market, particularly commercial real estate, borrowed money 2, 3, 4, 5 years ago at really low rates. And the higher rates are,
talking all through the mic,
mature, it's going to be that much harder for them to get the financing to roll them over. And then you have the prospect of very disorderly bankruptcies throughout the economy.
Andy, we just want to quickly look at the 10-year and the 2-year. The 2-year is most sensitive to Fed policy. That one had dropped 5 basis points. Let's see where it is right now. And in doing so, Treasury investors are appearing to shift their positions, moving to the longer dated bonds versus the shorter dated ones.
Liz, they think that the recession is coming. There's no question that this Fed is not believed. Just taking the 2-year for a second.
Yeah,
the 2-year's
the recession's here.
115 basis points through Fed funds right now. So that's telling you there's a lot of disbelief out there. The 5-year's somewhere around 3 3/8, 340, give or take. That is telling you that people are investing, that they don't think these yields are going to be here, and that the Fed is going to turn around and start easing, regardless of the fact that they say they won't.
Andy, Peter, thank you so much.
Good video, guys. Listen, that's just a full in so people can understand not only, which I think everybody clearly see the economic shifts, the breakdowns that are going on in the system. I'm glad Jay Powell's just sticking and holding his nuts down on that fire. Hey, he's not a like person, but one you got to reset it. So let's hike it up and let's get it how it is. But these hikes are what's exposing all these little demons that have been playing these fraudulent games. So like I said, do I like being in this distress? No. But am I glad that short sellers, bad banks, people that are playing above the law, above the rules of the game, playing to no avail just for their own personal gain. Yeah, I'm glad that they're getting their 1s or 2s for it back. So let's go back through here, guys. Listen, let's just sit back and just look at this bad boy. It feels good. It feels good. Like I told y'all, boys, back in 516, we broke that 537 level, guys. That move to 640 can happen quick. This is no man's land. There's no real resistance walls. This right here is them stopping. These sales aren't supposed. Look at this. Look how we came out every single day, melting up. This, look at that. Of course, you have 9 o'clock sell-offs, but this is what they're combining those shares for to try to stall, and it's still coming to no avail. We have 582 today, guys. Listen, we're closing in. It's gonna get. I'm looking forward to what earnings will be, which you guys will be the 5th. What is that? So that's gonna be Friday, correct? Woo-wee! All right, so Friday. I actually just realized that. So Friday, end of market week, earnings call. I'm trying to see what happens if we smash through earnings and we go green. This is completely and utterly out of their control. Guys, double tapping in over here. Short interest. Tell me this is ironic. 26.62%, and the days to cover has now bounced back up, going towards 8. Interesting. Y'all had it down to 6. It's going back up to 8, but the short interest has never changed. Coming on AMC Stock Tracker, we got 850,000 shares that they borrowed at 177. So the cost to borrow is magically supposed to be going down, huh? Guys, this is Synthetic City. This is synthetic city. 60% of short. We can't see what percentage is happening on there, but 60% of the trading going on for AMC is being shorted on the dark pool, which is insane. Beautifully so. Look at this. In the money's getting smoldered. Fall on out. I want to see this go to 15,000. And this over here, 400 something. That's what I want to see. I want to see that flip upside down. Pulling through though. Let's double check. Let's see here. Where was I at? Oh. I actually didn't have it pulled up, but I wrote it down. So, explanation, guys, because I set up, I was like, how? They just blatantly creating these shares up here. So check this out. April, which I pulled up yesterday in yesterday's video, the 18 million, when they released the failed delivers, that 18 million had hit. So here's the full story of that. The fails to deliver per day last month was 7.9 million shares failed to deliver each day. That's what the cumulative average is. Spike days, April 6th, 18 million failed to deliver. April 10th, 17 million failed to deliver. And this is what I noted in on it. I said those failed delivers happened where AMC was at its lowest price. That was near $4.70, $4.80, $4.90, which I look at and I see that's a complete correlation that they were just naked short selling. Guys, they failed to deliver 18 million and 17 million. All at the same time, we're looking at AMC just go down magically. And I said, every single day I say, this is nonsensical. This is not real movement. Well, they were just hitting us each day, ladder attacking. Guys, they accrued up 37 million failed to delivers last month playing that game just to come out and we're at 586 or 580 something now, 570 something. What are we at? Let me see here. 578, 580, about to crack through 6. Oh my. And I said, another funny part is, while this is all happening, they blew this. Are short sellers expecting price move in AMC? I said, it's mighty funny how now you're watching a lot of failed delivers. You're watching what seems to be slight coverage. People are buying. They're allowing buying to go through, right? You watch that pension fund in New Jersey drop FRC, which obviously they had nothing to lose after if they were holding that bad boy, got smoked, and bought into AMC at the exact same time. If I'm not mistaken, I think 2 years ago, there was a pension fund that bought in at around the same time that we had our first run up. I swear, if I'm not mistaken, it was a pension fund or something that happened. Around that time, or that might have been mid-run when it was at 30 or 40 or something like that. But I know that occurred. But like I said, that pulls and that explains the drop in the cost to borrow, and when it went down in those days on where the days on loan seemed like they were going down, just up to the fact that they might have actually been allowing some type of, I don't know if we would call it covering, I don't know what you call this, but obviously they're allowing this buying pressure to go through. There's nothing halting it. You're watching the short interest stay at the same point. This is not under their control right now. Now, do I feel like they about to let it smash through on the earnings? If we go green on earnings, I'm going to sit up on a stand on the fact that we're in the midst of what we would call the beginning of our run. I would say that we're in the beginning of, if they got till June 29th to try to hold this down, so essentially 2 months, while all this is happening, while banks are collapsing, while they're about to tighten up on lending, I'm just saying, if it was going to run, if it was time, if there was a what's the word I'm looking for? If there were the right elements for a squeeze, right? Now would be the time where you have all those elements together. I'm just telling you. This is a bad spot to be for a short seller of retail stock. Pulling in, last part, guys, as I say, this is the time to be purchasing some sweet stocks. Not financial advice, but I'm just going to screen these across y'all face. 160. 167. Oh, wait, look at that. Guys, The greatest generational wealth transfer is occurring right now, and you're a fool. You're a fool if you think that it's time for you to say, you know, no, I'm not going to buy anything. I'm going to sit back. Hey, when others are scared, when others are fearful, be greedy. When others are greedy, that's when you need to be fearful. If you don't think Apple stock could be above $167 in the next 5 or 10 years, hey, I understand. But for me, I know what we got with all this pushing out of AI, EV, the futuristic that's coming, NVIDIA, 278. I'm buying it. I'm buying it, and I'm dollar cost averaging. But I'm just telling you, if you think these are high prices now, just wait, guys. AI is coming in so swift and so fast. I'm spelling it. Come on now. Okay. Microsoft. Exposed to the chips. This is where you talking about buying those high quality companies. I ain't trying to go and figure out which AI company. I'm about to buy the chips that y'all need for it. And these chips are needed for everything. It's a fool's errand. It's a fool's errand. Look at this. It's a fool's errand. Somebody was down here 63 in 2017. You hear me? This is what investing is. At these times we're scared, where you're watching things that have dipped off from where their highs are. Look at these U's. But I still am not gonna. I want this to be voiced that I don't believe that the end of or how the market's moving. I don't think that it's time to say, oh yeah, we're going bullish. There's going to be more red to come, but I'm just telling you, at these price points, I see it as a buy. I just feel like in 5 or 10 years, this will be 2 times its worth or 3 times its worth. Same with Tesla. Same with XRP. But pulling in, tapping in XRP. Check this out, guys. So what we're looking at right here is what they have, the reverse ATM. I saw this and I was like, well, enter CBDC, central banking digital currency. Here's how we go. Reverse ATMs facilitate an increasingly cashless society. Reverse ATMs dispense prepaid active cards in exchange of cash. Business preferred ATMs as they are helping prevent theft and robberies. ATMs are being installed in parks, restaurants, sports, and venues. This is how they started, guys. This is how we move into it. Cash is still king, but reverse ATMs may be the way of the future as more business shift to cashless-only transactions. These reverse ATMs, also known as cash-to-card kiosks, are being installed in amusement parks, fast food restaurants, and many professional sports venues, and will soon be installed in airports and college campuses. Well, look how they're moving now. Look at who they're hitting, the young crowd. I'm telling you, watch. In New York City, Madison Square Garden is one of the many venues that install machines inside its arena that can convert cash into debit cards. So you walk in, you put your money in, it does the transaction, immediately gives you a debit card, which is obviously just a digital number, a digital currency, right? And that's what you use to shop, as they're saying we're moving away from cash, having cash transactions. Hey, guys, I can't make you get it. XRP, H-bar, y'all know Bitcoin, Ethereum. Guys, this is the greatest generational wealth transfer ever. Hey, what a time to be alive, because I'm telling you, I'm coming out on top of this thing going crazy. I need a yacht. I need a yacht with a lady in every flavor. In every flavor. That's all I need. I'm trying to just hang off of that thing like this right here. And I know it's coming. This is me in the wind right here. Somebody driving my yacht. Hey, but nonetheless, y'all got that visual. Y'all know what I'm coming. I'm just telling you how I was doing. You've got this movement. The time to be looking into crypto. If you don't know, go look at my crypto videos. I got an explanation what XRP is, how to buy it, where to buy it. I got a review of one of my storage wallets. I'm about to do the Legend Nano X eventually. I got a lot of videos I need to do on the side to fill in here. But like I said, a beautiful thing. I'm just glad to be able to do this stuff. I'm glad that y'all boys are here with me. Much support, and to the ladies too. Much support to, the retail family. Much support to everybody that comes through. Love in the comments. Good discussion. This is literally what I'm pitching. Like I said, I got so much in the future as far as what we're gonna do with this channel. Hey, like I said, y'all stay tuned. Hey, you're not gonna be let down. I'm telling you now. But more or less, hey y'all, this might be a good little weekend. It might be shots o'clock again. It might be shots o'clock. Hey, much love. Y'all hold it down. Hey, to the next video. Yes, sir.